Namaste to all. Today we are going to see who pays tax. This is our topic. Here is the agenda of our topic. We will see about 5 different taxes and specific topics like tax return, TDS and tax exemptions. We will look the introduction. First of all, we should know what is a tax. We pay taxes in our daily life to the government to get the best infrastructure from the government, which we use as public facilities and transport, etc. Who pays tax? We know that we pay tax in our daily life. The citizens of India should pay, and sometimes all the companies should pay corporate tax, a specific tax, and foreign people who visit India for tourism or any purpose, for tourism they should pay GST tax for specific things. And the first type of tax is direct tax, where we are going to see 2 examples. The first one is personal income tax, so which is charged on a person's total income. If you earn up to 3 lakhs, which is less than 3 lakhs, you should pay 0% of your personal tax. And these are the ranges. If you get more than 15 lakhs, you should pay 30% of your income tax. And the another example is stamp duty. Stamp duty is which is charged on legal documents. Suppose if you are going to buy a land in somewhere in India, you should pay the stamp duty for that legal document. And it is a state level tax because the population varies in different states. For example, in Maharashtra the population is very high, so the stamp duty will be high and it will differ. Indirect tax, GST, which is charged on goods and services across our country. The very important point which we should discuss here is which is a company which gets more than 40 lakhs on goods and 20 lakhs on services per year, they should pay GST also. Corporate tax plus GST, that company should pay. And the second example is excise duty, which is charged on fossil fuels, natural gas and sin goods like alcohol and tobacco. And this tax is levied on production. Like if we get crude oil, it is the initial stage of that oil. For that we have to pay excise duty, and this is paid for the central government. The difference between and we are going to see about VAT, the value added tax, and which is also charged on the same products like fossil fuels, sin goods, and this is paid on value addition, where if you go to a petrol bunk and put petrol or diesel, which is extracted from the source, which is crude oil, so we have to pay VAT for the state government and the tax which is paid on value addition. This is the main difference between these two. And the third one is customs duty, tax which is charged on movement of goods across international borders like imports and exports. And if you want to import a car, luxury cars, alcohol, you should pay 50% of customs duty. And for jewelries, we should pay 15 to 25. And for mobile phones, for gadgets, we should pay 20%. And for example, a person buys some amount of gold, which is 20 grams, a fixed amount, from any other country and returns to India, then he should pay 10.75% of customs duty in India. The next topic is TDS, tax deducted at source, and it is explained under section 194 in our constitution, and it is totally applicable in 15 areas where salary, interest, rent, lottery and many other. We will look about salary now. For example, if you work in a company and they are paying income to us, the company will give income to us, and some specific amount of money is deducted from that income and sent to the tax authorities, which is called as TDS. And it is reported every year per annum, and they will check the amount of tax. If the tax is greater than the actual tax amount, then the government will repay the remaining money, and if the tax is less than the given tax amount, then we should repay the difference to the government. The TDS rates vary between 10 to 30 and surcharge, which is an extra charge for gambling games like lottery, etc. The next topic is tax return, where it is a documentation. If you tax return is also calculated for 1 year. This is the same which we saw in the previous one, where if the actual tax amount is less than if you pay more amount than the actual tax amount, then the government will repay the difference, right? So the government is returning our money. So this is called as tax return, where we will see one example. Actual tax amount which you should pay. For example, it is 10,000, but you paid extra 200 rupees, 10,200. Then the government will return that 200 rupees to us. That's the tax return. And this is a simple diagram which represents TDS and tax return, where TDS is paid for the government and the remaining money is paid again to us, and it is calculated, it is reported for 1 year, and the government will decide whether we should pay or return according to the conditions. Tax exemptions. For example, if we help others, then the government will reduce some tax for us. It is called as tax exemptions. Sometimes, person or a company will can pay reduced tax. The example one is Section 80 IAC, which is in our constitution. This is for encouraging many entrepreneurs and business people, because if a businessman starts a small company, then they may face loss. So for them not to be demotivated, the government has initiated this. So if a businessman starts a small company, they may face loss. This is only applicable for the first 10 years of that inauguration. If they face loss for 3 years, then they don't want to pay tax for 3 years. Any 3 years in the first 10 continuous years. And the example 2 is Section 80C Act. And this is applicable for only individuals like us and Hindu undivided families, where this is for encouraging savings. And if you invest some money in specific sectors, like these are all the sectors which is applicable under 80C. If we invest some money in specific sectors, then we will get 1.5 lakhs tax exemption, and we can use that in any of these sectors in different ratios. This is a very important scheme in our India, in our country. And we have come to the conclusion. Taxes play a very important role in our daily economy, because if we pay tax to the government provides many infrastructures like roads, transport, and some of the infrastructures provided by the central government are our army, defense forces, highways, and national organizations like ISRO. They are all funded by our taxes, and by the state governments, state highways, state police, and many public facilities like ration shops. They are all funded by our tax. And thank you. I hope you people all enjoyed and understood this. Thank you very much.